Yo, 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 yo. What's up, everybody? This was a little bit unplanned today, but I guess we'll be just doing a quick short recap. Didn't actually plan to do this, but let's get this show on the road. Welcome, everybody. Just making sure everything is ready and prepped here. Just give me 1 minute. If anybody's watching or something, you just let me know if you guys can hear me. If it's loud enough, or it's too loud, or the music, or please do let me know. Let me just get the stream up here. Short and sweet, ladies and gentlemen. Short and sweet. Easy peasy. Just make sure everything is running. Get rid of YouTube Studio. Okay. Okay. Let me just. So everybody can hear me? Anybody can hear me? Hear me? Just make sure. Yo. Okay. Sit running, baby. Sit running. Thank you, guys. Let's get this up. Can't see none. Okay. Welcome. So hey everybody, this will be a short recap of what happened on Friday. To be specific with the date, it was Friday the 12th of June. So this was a really good day to have an example of a higher time frame reversal trade. So basically, as you will see today, I already played out from Friday, but I'll just be basically explaining in short and sweet for you guys exactly what happened. So what drew my attention, if you were to look out on the 15-minute, was this massive imbalance. So you'll see we had this massive run down all the way from the 9th of June. We had this beautiful momentum to the downside. So we had a lot of work to play off of. We left this huge gap. So what pulled my attention was that you'll see on the lower time frame, this is a premium version of this imbalance. So this becomes our buy side, sell side inefficiency. And I'll show you now when we get to the lower time frames. So what drew my attention was the high of this fair value gap. So this became my primary long-term buy side objective. So what happened was, now with knowing that, you will see that what happened in London session. So on Thursday we gapped up at the midnight open, new day opening gap, we inverted to this but left the gap. So what happened, we pushed back up to where? Into this. Show you. You see here on the 15-minute onto the body, this is a buy side, sell side inefficiency. Why? Because the buy side created an imbalance, but the sell side left an inefficiency. But right here, this is where the orders are laying. And like we mentioned, this is the high. So what does this mean? Retail traders are leaving their stops above these highs. Alright? And below here, this is where dumb money is laying. This is where the people that saw, oh, okay, we're going down, so what should we do? Let's put in more entries, And as soon as this run started, what is dumb money thinking? They are thinking, hey, okay, we're in our trade, let's just hold it. Hold it and don't fold it. That's the motto of dumb money. So what we saw is that, okay, we know smart money traders, or retail traders, sorry, are keeping their stops above this high. Okay, and dumb money traders, where are they keeping their stops? Probably above this, or on the 50% of this imbalance. So taking that in mind, let's see what happened at New York Open. So pre-market, pre-9:30 New York opening bell, what happened? What did you see? On Thursday, the 11th of June, the market created a what? A fair value gap. So this became our support, or your premium, because this is a strong rejection off of what? An imbalance that should be filled. Because why did we say, when we just look now on the lower time frame, what did we see? We saw that retail traders stops are laying above this, and right above this is where dumb money stops are. So what happened? Dumb money got stopped out because, like we mentioned, their stops would be at the equilibrium of this imbalance. We rallied up, dumb money was taken, pushed back down, dumb money entered again, thinking, okay, maybe this is just a pullback or probably another short, or they're thinking let's long. So what happened? Market pushed down, you had an inversion from this inefficiency, buy side, sell side inefficiency, all the way down to this fair value gap where the liquidity was lying. So this is for Thursday. So on Friday, what happened in the London session? what we saw was, like we said, price inverted on Thursday. At midnight, we created a fair value gap. We inverted that fair value gap at around 1 a.m. Market rallied down, created a what? This inefficiency, fair value gap. Market structure shift, we created an imbalance to the downside with a fair value gap. See guys, it's the pattern that just keeps repeating. So created this inefficiency down into this fair value gap. So what happened? Market inefficiency got filled. So this was your London. Okay, right here, what is this? This is where your keynote, this is where we are starting to look, okay, what is going to happen for New York? Because we know around Thursday we rallied up into this inefficiency. We failed to close with a body above the equilibrium, which meant buy side is inefficient. So what means is this high of this fair value gap, what did that become? It became a buy side liquidity pool, or your retail buy stops. Easy. So let's see here guys, with the primary buy side that we just got entailed, we know now that this is a potential draw on liquidity created on Thursday around 5 a.m. What happened? We pushed back up into this inefficiency, we closed with a body, but these wicks, you will see, it kind of gave the annotation that hey, there's still possible orders we still want to fill maybe. Why? Because look here, retail are thinking, just think in the mind, what is retail thinking right here? They're thinking, hey, thank you dumb money, we're gonna get another, we're gonna put more we're gonna add more entries right here. So what does the market do? You entered with this fair value gap, you swept this inefficiency or sell or minor buy side liquidity pool, and I'll get to that now. But you will see that the primary objective is that this imbalance, this previous imbalance, got filled, as well as the buy side, which got swept at around 6 a.m. on the docket. So you'll see what happened. We got a fair value gap which got inverted, and where did we rally to? This fair value gap. And you go, and anybody can debate me on this any freaking day. Like I said guys, every single time on all the streams, is that the market only likes to go for two things, and that is the life and the blood of the market, and that will always be liquidity pools and market inefficiencies or fair value gaps. And everybody has a different opinion or version of what is a fair value gap, or what is a, doesn't matter if you know what I mean. Everybody has their own confirmations and biases of what the market wants to do, and that's perfectly fine, as long as you know what actually drives the market and why it goes to where it wants to go, what supports the market, what is the fuel that you need in order to succeed. So this is basically what I'm trying to teach here to everybody today, and we'll be doing this every single day as long as we can. And yeah, that's the whole point of it guys. So Terp23Trades is always going to be here for the community. There's a lot of false advertisement and manipulation out there guys. So yeah, like I said, as long as we can change one person's lives guys, this will be a blessing. So get back to it, guys. Like I said, this sell side, I'm going to show you now. Let's go down. We identified the 15-minute. You'll see that this high, this inefficiency, what it creates, this is really, it's too good. As you can see, the body of the wick filled this fair value gap, leaving this inefficiency right here open with these retail orders or stops lying above this order block, which, like I always say, guys, an imbalance is a place where the market looks too good. It's too good. There's an imbalance. It's like a beautiful lady. You look too good. It's too good to be true. You're probably a gold digger. So what I'm saying, guys, is you'll see that an imbalance is where the market looks too good, even if it has all the criteria. But that takes a certain eye to notice it. So what do you notice here on the 15-minute, which is our clear liquidity pool, primary higher time frame confirmation? How can I say time frame? The 15-minute shows you all the liquidity pools, and I'm just showing you guys this on the 1 minute to identify to you that we are true. Retail stops are laying above here, liquidity pool right above here. Let's go to where London was. So what happened? Market rallied up into this liquidity pool that we swept. See here, guys, liquidity pool, market rallied back up. Okay, we rallied up into the primary liquidity pool, which was these retail stops, thinking that they were on the top of the world, riding this journey all the way down, hoping that the market's gonna come back. So what did the market do? We rallied and really violated this, but this wick, guys, this is a really important wick. The fact that this wick closed almost is too much points. You'll see that it's around 28 points, which means this is a imbalance. So what did this become? It became fuel or a order block, whatever you will, guys. Like I said, you can make 1,000 different stories out of this, 1,000 different pieces of glass from the same mirror, and you will get the same result. A mirror does one thing and it shows you what what you want to see, what you're showing it, even if you break it up into a million pieces. So as long as you can see the picture and what the market is actually trying to show you, you literally can't go wrong, guys. In no aspect you can be wrong, because you know where we're going, why, and what supports it, and what supports it. Liquidity pools and imbalances. And what happened right here, we had a previous imbalance which was supported by a minor buy side, as well as retail stops above this high. We created orders above here which signify that we want to come back up, and not even just this, like we can mark this now. It said, okay, in the future this is going to become our next long-term primary buy side. Okay, even though this one got invalidated because it was supported by this imbalance as well as this minor buy side liquidity pool. So even though this was taken, the fact that this wick so high with, like you guys saw, 28 points, this meant that the market created a order block, which means we're going to reverse. So what did that signify to you? I want to start looking for sells. And where was the sells? This minor sell side, because look here, we had this fair value gap, which was supposed to go up and then go up. It was not supposed to wick down here. Why? Because it's too good. There's a gap here with orders that's feeling like, hey, we're gonna go up to the moon again. Okay, so you'll see that this was a sell side, our minor sell side, because it's the closest to this run. Okay, New York Open starts at around 6 a.m. What happened? You know that we swept these buy side liquidity pools, created a order block, fair value gap, inverted the fair value gap, market structure shift, change of character right here, swept this, retail got stopped out again, thinking they're gonna get more longs, taking this high. This high basically became your buy side liquidity trap. It's a retail trap because retail are thinking, hey, okay, maybe it's just another pullback to go higher. But surprise, surprise, they got swept at this inefficiency, thinking we're gonna go here, and right here, bang, on the docket, ladies and gentlemen. Fair value gap, inversion, and where do we go? All the way to this sell side, which was a high time frame, a low resistance liquidity scalp. So scalpers will be looking to take this, if I could put it into perspective. But we here at Terp23Trades are not scalpers. We look to take food where we can and leave to eat the whole meal, if I could say it like that, because in this market we are the alpha. We eat more than the other, how can I say, animals eat. So what happens is, you saw your confirmation here. We've taken some partials right here because this miner got swept. What else was there? You see right here that we had a choppy, no real information, nothing really there. It's kind of just like an imbalance, and this is the low of it. So what you see from this leg all the way down, this was choppy, is a imbalance, fair value gap, but it's just chop. It's liquidity, it's gapped up, it's AI, it's it's crazy. So this whole leg up here was for me just pure weakness in the market. This is nothing stable. There's no, how can I say, foundation to that actually supports price right here. So what gave that indication for me? This was our higher time frame sell side, because why? This was created on Friday, and like I said, you can see here that there's nothing actually supporting price. Not this imbalance, not this imbalance. It's just liquidity. So you'll see here we got our first impulsive move, which created a fair value gap. Right here we got a order block, or not an order block, but a fair value gap. This can also be classified as a rejection block. Why? Because price immediately just repriced back up. It rejected the idea of this fair value gap being inverted, because it already got inverted on this leg, but price just gapped away from this whole imbalance, which just gave you even more confirmation that, okay, we know now this is chop. The low of this will be our sell side for a long term, and right here can either be this low or this low. Why did I pick this low? Because you'll see on the 15-minute, see, this stuff repeats every single day, ladies and gentlemen, every single day. Okay, why did I pick this low? Because this is our fair value gap. Could even put it here. This is the fair value gap. See this low? The low of the rejection block, which became the sell side. And this whole massive imbalance, this was a gap, a fair value gap or an imbalance. It can be considered as anything, like I said, guys. So what happened here? Identified our higher time frame sell side, identified our primary sell side, because this is the last imbalance before a proper liquidity run. So where? These highs, and all these highs, and all these highs, all the way up into this inefficiency that we mentioned at the start of the stream. So what happened? We swept this minor, we rallied back up to get some more orders, and by now the bells start ringing, ladies and gentlemen. After taking these minor lows, we reinstated that this imbalance created a new imbalance. So it was supported by what? Our previous imbalance, our previous liquidity runs, this support, this retail buy trap. What happened? We supported the idea of lower prices, because look, rejected it one time, rejected it 2 times, 3 times, 4 times, 5 times, 4 times to 5 times we rejected to take this high, even this high, I mean. So what does that indicate? That we are weak, that price is weak, even though we swept this. And what does that mean? What does it mean when you are weak? You need fuel, you need petrol or diesel, you need the carbohydrates to fuel your body in order to do what you actually want to do. What do we actually want to do? On a higher time frame perspective, we are bullish, because the markets have just been on a fanatic bull run, and especially with the past bearish runs that we had all the way from Wednesday, this just proves that like last week Wednesday, sorry, this just proves that we are wanting to see some bullish prices. So what happened was, the market showed here some weakness in inefficiencies. Right here you got your fair value gap. Why? Because we swept all these highs, all these equal highs. See? Why? Because the body, remember how that one guy said, when the body closes, it means it's the story telling the prices have been filled, but I'm offering another opportunity to see some lower prices. You see, ladies and gentlemen, how this literally goes to the tick, because this is the way the market moves. And not only did we go here, look what happened at 9 o'clock. Rallied back up, fair value gap, little strong inversion up into this imbalance, all the way down. yeah. That's the good stuff, man. That's the good stuff. All the way down to this inefficiency that we talked about. So what did London actually do on Friday, ladies and gentlemen? It created the scene, it created the set after selling off, keeping this fair value gap intact. Okay? Because the price is fair. It's a fair value gap. It's a place where everything is good, everything is fine. But if you have to look at history, what happened? What did the Romans, for example, do when it was a vacation and everybody was at the carnival and it was happy-go-lucky and everybody was happy and everything was fine? What happened? What did they do? They were planning. planning and planning while everybody was having fun and fun and fun and working and focusing on other things. So what happened? They strategized. They formed a plan to do what? To attack the people that are resting above here, which is retail. You see, ladies and gentlemen, how this literally is like a story of how the market moves. And this is the most amazing thing about trading, is that it's literally a story about how the market moves. And if you pay close enough attention, you'll see that the market will actually tell you where it wants to go and why. There's no tweet, there's no Trump calling something, telling, oh, we're gonna tweet this, oh, this and that. That's a fugazi, if I have to say it like that. I'm literally showing you guys that everything is right here. And there's been mentors, like, I won't mention any names, but there's mentors that literally show this to the point. And there's people that other gurus or mentors that will take this and make it into something that's like I mentioned with the mirror. He'll take a mirror and he'll smash it and break it into 1,000,000 pieces, and then it'll sell you that little pieces. So yes, guys, in my personal humble opinion, the market is really here for you to see in the way of like a type of art form. Because this is art, ladies and gentlemen, as you can see. The way the market moves, it gathers it's like the circle of life. Gets its food, supports the idea, rally down. And what happened right after? Market open. We stripped the primary objective for the day, due to price showing us here, and here. What? We don't want to go up here. We need something down here. So what did the price do? It was a beautiful journey all the way down here. Okay? Right after that, what happened? You had your recovery up into this inefficiency. This is a fair value gap, which got inverted by another fair value gap, which got inverted again. On the docket, on the stamp, kabish, kabang, kabang. So what you'll see, guys, is right here. This was your, zoom this in. Right here, this was a little bit still unclear. Right here, I would have started seeing some bells. We supported the idea by not having a body close below this inefficiency, the equilibrium of this inefficiency. You'll see right here. The bodies did not close below this high, the 50% or the low of this wick. So what happened? What did that mean? That meant we are strong again. We just ate fuel. We just ate a whole meal. We ate the small fry, we ate the little fry, and we ate the big meal. We ate the Big Mac. If you guys understand what I'm saying. So, like I said, here we are full. We are ready to compete with the best. So what happened? We supported the idea right here. Market rallied up, created a fair value gap. See here? It's fair. What happened? Here is the low of the fair value gap after this high. This is the highest point up into this inefficiency, which created the fair value gap. The body of this low and all this, at least the 50% of this got wicked, which really takes a clear eye or a lower time frame perspective on the market to be able to see this. That's just me personally. I love the 1 minute. I can literally trade off of the 1 minute, and you can see this confirm for you off of the 5 minute as well. So you got your fair value gap. But for you to, like I said, look at this big run. For somebody that's going to be waiting till, okay, I'm going to wait for like 3 minutes. I'm going to wait for the 5 past 10 close. Okay, let's wait for the 5 past 10 close. What will happen? If you waited for 5:10, for example, you'd been scared shitless. You'd been like, oh, my TP's been hit. Do I just enter? So you've been gambling, some people, if you guys understand. And that's why I say I like the 1 minute. Because that's just the way we roll, man. But it's all down to your preference, guys. Like, remember, time is fractal. And like the great mentor once said, time is fractal himself. So that's like the perspective I like to see at it. So if you can look at it from lower fractals up into the higher fractals and all the way, how can I say, back and forth, you'll see the full story. And it will be repeating every single day. The story, the way life goes, the way the little gazelle has to be eaten by the lion. It just repeats itself every single time. And this is the beauty of the market, ladies and gentlemen. So yeah, you'll see that the primary objective was taken for the day. This massive inefficiency with all these liquidities. As well as what? Why did we come back up? We got a V-shaped recovery, a fair value gap, an inversion of the 50% or the equilibrium of this inefficiency, a fair value gap again, inversion, and your displacement. Another fair value gap, another inversion, and another. So like you see, guys, it does not matter when or what time frame you use. It just depends on what type of model, what type of structure, what type of time frame, what type of time fractal it takes to fit with your model. And that's what makes it niche. That's what makes your strategy unique towards your way of seeing to the market, because not everybody can fit in the same shoe. Not everybody can see the same thing. And that's why you have to adapt and to see and to fit, how can I say, into what your type of fit is. So what you'll see here is all the way we got this beautiful displacement from the 10 a.m. macro, and this is when most of the gurus will be looking to see. And after, like we said, here we saw a fair value gap that was inverted, another fair value gap inverted, another fair value gap inverted. We traded a inefficiency. We respected the third quarter of this inefficiency, as well as the 50% basically of this range. After that, got your little rally, another fair value gap, inversion, imbalance. Every single time, guys, every single time. It's just amazing to see how the market operates. So basically, after that, you got your V-shape. It's just repeats itself, guys. This thing runs on an algorithm that runs every single day, every single time. Doesn't matter what, it does the same thing. It's crazy. So yeah, where do we run to? These inefficiencies, this retail trap that we mentioned, that we didn't have enough fuel for. We tried 1, 2, 3, 4, 5. We tried, failed. Got enough food, and where do we go to? We had enough power all the way to run to this high time frame market buy side, sell side inefficiency, right? How beautiful is that? To the wick and through. So yeah, that's will most likely be it, ladies and gentlemen. This will be out, yeah, like I said in the beginning, so it'll have to be a short one, but I would just like to thank everybody for joining. And like I said, guys, trading can change your life, and don't fall for people trying to yeah, just do you, guys. Much love to you, everybody out there, and I hope everybody is profitable and learn something new every single day, learn something from the stream, and that's the blessing I wish for everybody. Thank you everybody for staying tight for the video today. My stutter. Much love to everybody. Peace.